Join over 5,000 attendees for the largest AI event in Asia, Super AI in Singapore, February 28th to 29th, 2024. Edward Snowden, Benedict Evans, Balaji Srinivasan, and over 150 others will hit the stage, joining the industry's most influential minds to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a week from February 26th to March 3rd, with over 150 side events that will make for unparalleled networking opportunities. Visit www.realvision.com/superai for 20% off tickets with the code REALVISION. Is gold ready to shine? Hi, everyone. Welcome to the Real Vision Daily Briefing. With me today is Dale Pinkert, trading coach at TradeGate Hub. Hi, Dale. Great to have you back on.
Hi, Maggie. I'm wearing my America in Distress shirt. That's the title of the shirt. As the dollar embarks on a new wave, bear market wave to the downside.
Fantastic. I mean, we should have put that as the question to kick us off. Is American distress? You actually, I know we were just chit-chatting as we were coming to air, talking about how much has changed since you were on October, and I know you have thoughts about all the asset markets you watch. So we're gonna kind of break it down and go through them. But I'd like to start with, and including gold. We're gonna get to gold and metals, but I want to start with treasuries because I mean, this has just been a massive move, and so much is keying off both treasuries and the dollar. We had all through November, but even this week, we had Fed speak yesterday suggesting maybe inflation's under control. That got people thinking about maybe the next move being an ease. And then today, headlines that Bill Ackman is calling on the Fed to start cutting rates soon to avoid a hard landing. He's talking about maybe first quarter, which is well ahead of consensus. Market expecting them to maybe start easing in June. We saw the 10-year move back below 4.3%.
Yep.
How are you feeling about TLT here and yields?
Okay, well, if you put up the chart, our last conversation, you were talking about when the whole world was real bearish bonds still.
Yeah.
And we were on our way, we were making new lows. And you asked me about risk. I said the risk was the last 2 years. Ellioticians would call this wave 5 to the downside, which means it's completing and there's opportunity. And we had nice divergence down there. I talked about it, that there'd be a nice bear market rally. It wasn't the time to get out of your bonds. That I thought that this market had too many shorts in it. And here we are after a 10-point rally, a little bit above 92. And if viewers look left, there's a gap that was left on the way down, last part of the waterfall decline that was filled today at 92.42. So I'm looking at it now thinking we're getting pretty close to completion of this first wave. And really the theme of what I'm talking about, all markets, is so that people don't have FOMO and they remain patient and tactical and wait for levels and the market to come to them and not worry about the train leaving without them. If it does, there'll be another bus stop down the road. But I'm expecting declines in a lot of different markets, and I think TLT's a candidate. I'd be a buyer down there. I think there's another wave that will be at least equal to and maybe even 1.618 of that could take it up to initially 96 and maybe 102.
Right. And so TLT,
into
we're
the
talking
spring.
price. I led
Right.
into this with yields on the treasury. So you feel like the rally maybe hit a pause here, but that
Maybe
there
it's going to be
or a
inflation data.
consolidation.
Maybe we'll get some bad inflation data
Yeah.
tomorrow. And perhaps the Fed is looking at 2050 gold and looking at the froth again in the market
Mhm.
and may want to walk back his victory march. Really, he took a victory lap at the last presser. Maybe he's going to, instead of being nice, Jay Powell, he'll be mean, Jay Powell.
That's and that's
At
and
the
that's
next Fed
exactly the way
meeting.
you can describe it because sometimes he comes out in the market, it feels it
Yeah,
afterwards. I mean, we have seen that whiplash, post-Fed
yeah.
whiplash this year,
He
and
was
it's
so
true.
nice.
He
Oh,
was
he was
so
so
nice
nice.
last time. Maybe he's
What
gonna
a face ripping rally across the board and everything.
I know, but all
I
right.
got that.
Well, so potential for Jay Powell to be a little grinchy.
Yeah.
That but you don't see a big reversal or sell off in the way that we had before. Maybe
Oh
just
no.
a consolidation here, give back a little bit.
Yeah, half 50% retracement, maybe 61.8, and then have at least the kind of rally we've had from the October lows. In fact, I read today that this is the best month in the bond market in 40 years. So
Which
this
is
was,
just
yeah.
insane. We say this all the time, but these are huge moves we're seeing in bonds in a shorter period of time. I mean, this is, if you look at the year, both the pain when it was reversing and going up when people were trying to get long and just getting their, their heads ripped off. And now the same thing. I mean, it seemed like you said a lot of people were bearish. So a lot of people missed that initial turn in bonds.
Right. So the narrative has shifted. People got used to getting 5% on short term paper, and that's going away, which kind of pressures people that want to capture the yield to
Mm,
go out in duration and buy treasuries, so that if the market's right and Fed funds are 3% next year, they still have a better yield locking
yeah.
it in long term.
Yeah.
So that could feed on a lot of things. It could also feed into maybe a different mix of asset allocators, because a lot of people that were 60-40 in bonds, they lost so much money in bonds, 30-40%, maybe 50 if they were in near the top, that I guarantee you they don't have many bonds and they're more heavily stock. So there could be a move back out of some stocks and into bonds that could take
That's
away some of
so
the liquidity.
interesting. That's so
Yeah.
interesting, Dale, because, and this is the question that we have been asking and we're going to continue to ask because in the midst of that, brutal move with bonds and it's been years of this, right? We this isn't the this is back to back years where people have just been brutalized by the bond trade. We were hearing all over the place 60-40's dead. I mean, it's not that's it. It's over. So if you have that, I mean, this is, I guess, the question we have to continue to ask. Is it over? Or now people, could we see maybe not 60-40, but a reallocation somewhat back into bonds?
People like 5% money, Maggie. They're not going to want to see it slip away. They're going to step out onto the curve to capture it.
Yeah.
Plus, you have the potential for capital gains, not just the yield.
Yeah. Great point, Dell. And we'll keep pressing on that as we turn the corner into the new year. So and I know we're gonna have a bunch of questions from all of you. I see them coming in. A lot of people happy to see you here, of course.
Oh,
Uh but
bye,
let's
everyone.
but let's just work through a couple, just get your sort of thoughts so that we can really have a nice conversation. So the US dollar. I mean, we've seen big moves in everything, which is extraordinary this month of November. The US dollar also reacting to this sort of change in mindset now in terms of what's ahead for the US economy and the Fed, dipping down to 3-month lows. Look like it sort of popped up or stabilized a little bit today, but I mean, you mentioned America in distress. What are you looking at for the dollar, for the US dollar?
Well, viewers know I've been bullish the dollar from the 99 level. I was looking for 109, which would have been 61.8 back. You could put the chart up of the Dixie, but we failed at 107.40, closer to 50% retracement. And that's all this is. The big decline we had in the dollar was, a year and a half ago when we went from, the 114 level down to par. So all this rally did was, and I always felt it was a bear market rally, was retrace. Now on the CPI report, I had some support at 103 and a half, but the way the dollar sold off on the CPI, that it's not just a price level for support or resistance, it's how a market gets there.
Mm,
Okay. And that was
mhm.
such a vicious directional day that the dollar looked like a broken chart to me. Uh, I I waited to see if it would hold 103.60. That was a weekly moving average. It didn't. But now we're at retracement levels a little bit over 61.8 in the euro. Um, so I'm looking for risk off to be a catalyst for the dollar catching a bid for a bear market rally, perhaps back to 105 ish, which is a couple hundred points higher than where we are. And I've brought a couple of individual currencies that I like, and I'll share some levels. But this failure implies that if we have a wave equal to what we had, that 1400 point wave
Mm.
from 107, that takes you to 93. And then I could do fib extensions after that, and you get like 85.
Wow. So I
Okay,
just want to be clear because this is
this
Dale
is
is
big.
always gives us right, gives us like short time frames. So someone just said Dale, Ralph just said Dale is long USD. I don't think I think you think there could be a bounce short term, but
I'm
it sounds
not
like
long. All right,
yeah.
so everything I talk about, if I'm looking for a pullback, doesn't mean I'm going to short it because the pullback may not happen. If I'm looking for a dollar rebound to 105, doesn't mean I buy it.
Mhm,
Looking for it to go to 105 because that's not the trade. The trade is if it gets to 105, I'm a seller. So
mhm,
when I was a rookie, and I'm a mind reader. I'm kind of a trading psychiatrist. So this guy who asked me this question, because he does it and he's projecting it, thinks that if he has a level he wants to buy or sell into, he's saying, well, why don't I just buy it and sell it up there where I think it's going to go? Or why don't I sell it up here and buy it back when it gets to where I want to buy it? And those aren't trades.
mm,
Okay, just because you think you're going to get to a level to initiate a position, it's not high probability that you bet on that counter trend move. Okay, so even though I think the dollar's going to rally, I'm not long. I'm
mhm.
waiting for my spot to get long euro. I have the euro chart with us. I'm thinking between 108 and 107. I think there is a possibility of 107. I brought the
Okay, wait, is
euro,
this the euro?
euro,
Hold
euro
tight on that
USD.
chart for 1 second because so I just want to make sure we fully understand the dollar. So you're talking about looking at that 105 level because you're ultimately bearish the dollar. You think
I
this is
am
it. The
bearish.
dollar's going down.
Yeah, but
Right.
I don't chase markets. I think that what we're getting now is the completion of the first decline. I could be wrong, and it could waterfall and go
Mhm.
to 100. And that's going to be a stopping point. But the way I see the market shaping up, if bonds start to give up some of their gains and yields start to just rebound, I don't
Mhm.
think it's going to be long lived, the rebound. That could put pressure on stocks. And I really don't like what I'm seeing in FANG stocks, which are the ones that led this rally back
Yeah.
to the upside and, rip the shorts,
Rip the shorts
eyeballs
off the
out.
shorts.
Yeah, yeah, people were going commando after that. So I think that's all part of the scenario. I think metals
Yeah.
could pull back, but I could be wrong,
Right,
and we
just
could just break out.
it's been such a big move. It would
Yeah.
be natural to see there be some backing and filling, across all these
Well,
markets.
yeah, hard to find a dollar bull right now. Hard to find a gold bear right now. Hard to find an equity bear right now,
Mhm.
right? So these markets could, have a bit of a reversion
Right.
trade happen in a few weeks,
Which
and
is
that's
why
what I'm thinking.
you're looking at those prices as your sort of set point to be prepared for the next move that you
Now I
see.
am short Apple. Today I bought January 180 puts. I think it's going to 175, maybe 165, revisit those lows.
Mm.
And, I'm looking for a pretty good sell off here in the S&Ps. Wrong over
Okay, wait.
4,600.
We'll go back to that. So I
Okay.
wanted to get in a thought from Andreas before we go. So we finished up with the
Sure.
dollar. I want to move on to the euro, but before we do that, Andreas dropped an update for the business cycle, and he's watching developments in Europe. So I thought before we talk about the euro, it would be interesting to listen to a clip from that. Let's do that, and we'll talk on the other side.
So ultimately, what I'm saying here is that for the vast majority of companies out there, financial conditions are historically tight. It doesn't hold true for a couple of the big names within tech. It doesn't hold true for a couple of the big names within green tech. But in any case, the vast majority, the bulk of companies face extremely tight financial conditions, and financial conditions lead actual activity. You can use these indices to say something clever about the business cycle in 2 or 3 quarters from now. And therefore, the safe conclusion from this chart is that Europe will see clear headwinds from a credit and conditions-based perspective into 24. In the US, the picture will be mixed between some large corporations seeing very easy financial conditions, but underlying tight conditions for the rest of the corporate sector in the US. And ultimately, that will likely also drag US activity towards activity levels seen in Europe right now. That's at least my takeaway for next year. But remember, there's a short-term positive story for the US still ahead of New Year's.
That entire presentation by Andreas is available on our website. He goes into more detail on his outlook, what he's watching, and the timing. By the way, some of you may know, but Raul, Julian Biddle, and Andreas do these business cycle updates on the regular. They're on the plus tier, but that Black Friday cyber sale we had is extended through today, 50% off all memberships and upgrades. So take advantage of it if you haven't yet. So Dale,
Just do
so
it.
just do it. So Andreas definitely sees Europe, and he's like you looking at a short term, but then longer term into 24. He definitely sees Europe weakening and things happening there first, and that leading. I'm wondering how you're thinking about euro dollar here. What are you looking at for the euro?
Well, I tell you what, if I'm right and I agree with him about Europe, then I think we transition to Asia. I mean, things are already happening in the yen. That's changed a bit too.
Hmm.
And then the US. So that's kind of the sequence I see as, different
Interesting. Okay.
sectors of the world. The euro had this nice rally. I was looking for 102 for months, but it bottomed at 104 and a half. It's rallied a little bit over 110. And if I get that rally in the Dixie back to 105 or so, I think there's going to be an opportunity between 108 and possibly 107 and a half, 107 to buy the euro. After that, I'd be looking for 112 and for a little pause. And eventually, I think we could be looking at a 120 to 130 euro, which
Wow.
will only exacerbate Europe's problems having a strong currency with a weakening economy, and that their exports will become more difficult. Just
That
something else to
That's
put
so
on the
interesting.
fire.
Yeah. So, and that's a product of the dollar weakening against the euro more than anything,
Right,
right? The change in the
right.
US, but that'll put the pressure on. Very interesting and
And
problematic
yeah,
for Europe's
yeah.
economy for
So
sure.
we were able to tie that into what Andreas is
Yeah,
talking
absolutely.
about.
Yeah. And, and
Probably that maybe maybe he sees this coming too.
I'm gonna share that with Andreas and make
Most
sure he
people
does.
would take this forecast as being bearish euro because Europe's going to have trouble.
Yeah.
But sometimes a strong currency happens because you're having trouble and liquidity issues, so people
Hmm.
gravitate to the cash.
Yeah. No, great point. And a nuanced one as well. Aussie dollar. You're looking at Aussie dollar. Speaking of casting our
Yeah,
gaze toward the East and Asia.
yeah. So the Aussie uh, is threatening a breakout out of I call it a falling wedge. We tagged it today. I'm looking for a pullback anywhere around 64 and a half, wrong under 62. The next wave, I think, is 69. Eventually, I think you could see a 80, 90 cent Aussie.
Wow. Okay,
And,
so big.
part of that trade's a commodity trade. So a general weakening in the dollar trend and a country like Australia or Canada, which would mean short USD CAD, which means, you're shorting the Canadian. You're buying the Canadian
Mhm.
because of their oil, and you're buying Australia because of the minerals. So, commodity currencies, I think, are going to be stars.
It's amazing how everything's moving. I mean, we often talk, you always say you get the dollar right, and then that sort of sets everything. Peter Brandt is famous for saying that as well, who's a frequent guest on with us. You got to get that trade right, which explains why you had your shirt, and we're talking so much about currencies. So we've got a couple questions. You also sent over gold. We started the show by asking a question about that, and Mark is asking, you said it's hard to find a gold bear. Do you see that as a crowded trade now? When is it a short? And then J&J also asking about silver as well as gold. But let's talk about that gold chart.
Okay.
What do you see
So,
happening?
uh, you know, I I think DSI is about 80% bulls. Now, I'm not brave enough to short it here. Okay. Again, I'm going to wait for pullbacks. What I'd like to do is, if I'm right about a dollar rally, we should get a pullback in gold. Gold could fight a stronger dollar, but I expect that it will pull back. I could be wrong and we'll get through 2070 and we're on our way to 2250 or so. That's going to be the big breakout. That's a triple top that everyone's focused on. I think there's even, a low probability, but it could happen. Um, that gold could pull back to 1900. That would be about halfway back of the whole move. I mean, that would be a back up the truck moment. I don't give it a high probability, but I'm going to be looking at where gold and silver are at when the dollar looks like its rally is peaking. And I want to see how they perform if I'm right about the S&Ps, because this pullback could be anywhere from 2 to 300 handles in the S&Ps, what I'm looking for right now. 4340, outside shot of 42, and this break should hold. So I am participating in this counter trend by Apple puts. But as far as gold is concerned, that would be a great buying opportunity. I'm bullish. I think you put shorting out of your head for the next couple years, and you just do what people did in S&Ps for years. Buy the dips. Buy the dips. There's much higher prices coming. Perhaps silver might be more affected by, if I'm right about risk off, because it has the industrial nature to it. Perhaps silver pulls back to $23.50, 23.20. But all the gold shares, all the miners, well, not all of them, there are exceptions. Most of them, including GDX, have broken out. So if there's a general market sell-off, I think they're going to hold up quite well. Maybe they're going to continue to the upside. And you're not late if you didn't buy the bottom, because these miners are trading like when gold was 1400. So, and also it doesn't take a lot of money flow to make the miners move. You could take
Mm,
all the market cap of all the miners and it would be like one day trading IBM.
that's
So
amazing.
yeah, so you envision, like, what they put under the streets, the sewers, those big round things. Those are your large cap stocks. And then think of gold stocks as a garden hose. Think of silver and uranium stocks as a straw for, it doesn't take a lot of pressure buying power to make these things go. If things begin to, and the physical metals have been acting better than the shares for a long time, but the shares have all, they're all awake. I brought one that I've been showing on the show since I've been with you guys, and it's called Fortuna Mining. I brought that chart.
What are you looking at there?
Or it's Endeavor. It's
No,
one
it's
of the
Fortuna.
two.
I think it's
All
Fortuna.
right, Fortuna. It's up 50% in about 2 months, came out of a
Wow.
falling wedge. It's the best performing miner on my screen. So what do? Okay, if you're afraid of missing it, you buy some and say, boy, I hope I bought the top so this market comes down so I could dollar cost average in or buy it on a pullback to 330 to $3. But this I showed long term, major resistance is up around 10. It's a huge rectangle. And if it ever broke out over 10, it could go to $18 if we have like that $60 silver move. Right now, I'm looking for about 38 in silver. So buy the pullbacks. So everything I've talked about is I'm expecting counter trend moves to what's happened over the last month. And they'll have different degrees of magnitude. But that's the way I'm positioned going into maybe the first couple of weeks of Christmas.
I
And
think it's I
go
think
ahead.
it's really important that you've said this in different ways throughout, that don't chase these things though,
Yeah.
right? Sort of get your in your head what you think is going to happen, and then look for your entry points for the next move, because this is the beginning of bigger moves to come. And so you're kind of trying to, so don't sort of like be caught up in the enthusiasm in the crowd right now, it sounds like you're saying.
And you could always learn new things. And I believe I have. I'll share it with you guys. Bitcoin broke out 2 weeks before the stock market bottom, broke out before yields turned, broke out before the dollar turned. So I think I now have a market, whether I trade or not, that is an early indicator of what the rest of risk is going to do. And it's been kind of moving sideways, losing momentum for the last week or so. And I wouldn't chase Bitcoin either. I think you'll have a chance to buy it at 30 grand.
So this is what we say here: crypto's macro, macro's crypto. All of these things are interconnected, and that is a really interesting observation of that as an early indicator. Raul's talked about that a lot.
Maybe it sniffs out the liquidity faster than larger markets.
Exactly, Dale. This is what Raul spent a lot of time talking about. This is why we just put the Crypto Academy up online, folks. So that
great minds.
Right, exactly. So that we can think about this now that we've kind of been through a couple of these cycles. Every time people are learning more about how, how these cryptocurrencies interact with the rest of the markets. So
it's all
really,
flow. It's all
yes,
flow.
yes. And that's something Jem Carcellone talks about from Options too, which is why it's so critical to have veteran traders on like you, Dale, because you've watched that for a long time. So all of you, we had this with Tony Greer as well. All of you start to get a sense when you're seeing the flows, and also the confirmation, which in a big move like this, that's hit across so many different asset markets, has you thinking this is a different regime. And so you're getting yourself prepared for that. So I think that's so important that you've kind of laid out for us. It's so important that we make sure that we underscore that, because it's important for us all to watch, I think.
And when I was bearish from 4,500, 4,400, 4,600, I was looking for 39 and a half, 39.60. The low was 41. I would come on and say, if you're bullish, you ought to hope that this call and forecast works out, because you're going to be able to buy things cheaper. They were able to buy NVIDIA $100 cheaper, and Apple $30 cheaper. Tesla still hasn't really recovered, but you had bargains everywhere. And that's why we had this kind of move. There was so much compression. So, if we get a break, you're going to have better levels, and the better level you have, the less risk you have on the trade. because you're getting into the position closer to the lower high that turned the market.
Right. Both Timothy Vincent, he's interested in S&P days, weeks, and he's asking a follow-up, a pullback in the S&P 500. What kind of time frame could you see that happening in?
2-3 weeks into the Fed.
Yeah, remember we've got that important Fed meeting, which we already said
Yeah.
it could be Jay Powell. Is he Santa or
Mean.
Grinch? Mean or nice, Jay? By the way, Salesforce is out after the bell, and they have better than expected earnings. It looks like it's up about 6.8% after hours for anybody who might have Salesforce in their portfolio. Almost out of time, Dale, but I'm going to squeeze one more in for CHED, Ched. What does Dale feel about oil and oil stocks short term and then into 2024?
It's one of the weakest sectors right now, the XLE. And I would wait to see if I'm right on the S&Ps, what happens to the oil stocks. I believe they'll probably be pressured. I think everything's going to be pressured for a few weeks. So whatever you're looking to buy, maybe you're just patient for a few weeks and let's have a general market correction and see what holds up the best. And those are your preferred longs.
Yeah. So this is not a sort of Santa rally that's going to just to the sky here into year end. We probably saw
Well,
the best of that move, and then we're going to see some sort of sideways or consolidation. It sounds like you're saying.
yeah, I figure, into mid-month and we could start to rally and make new highs. I think that if we hold 43, 4,200, 4,100 is the it cannot take out 4,100. That changes the whole ballgame.
Mhm.
But I think there's enough momentum and rates that I think are going to have, head lower into, late winter, early spring, that the market should be able to make new all-time highs over 4,800. There are all kinds of targets, 51, 54. The Super Bowls are looking for 6 or better. But I think that we will have new highs. But I think some stocks may not. And I'm worried about the fangs and the exposure that people have. Today, Meta was down 6. Google was down 2.
That's really interesting because they have been the lead and they were
Yeah,
really strong at the beginning of this rally. So that
yeah,
they're sort of stalling out first is
yeah.
interesting.
Apple down $1 with the rest of the market unchanged, and the S&Ps did put in a pretty ugly candle.
Yeah.
So I don't think we'll take out today's highs, and the correction begins from today. What a lucky day to talk to you at the top of the S&Ps here, Maggie.
We have
Huh?
a knack of
It's in the stars. It's in
we
the
have a knack of
stars,
timing this.
and it's on the shirt.
Exactly. Christopher's just asking timing of S&P pullback. Christopher, if you missed it, Dale just said about 2 weeks, 3 weeks, maybe into mid-month and Fed, and then the possibility of a kind of resurgence then after that. But he's looking at a sort of 2 to 3 week period here where he's talking about that. Dale, it is always so fantastic
Thanks.
to have you on.
I really enjoyed it. I think people should take seriously us that live in America. They have a dollar hedge because some of the super bears I know actually think before it's over, all this de-dollarization, that the Dixie could be 50.
Wow.
So, you hedge yourself by diversifying into asset classes that would benefit from a weakening dollar. And, they're obvious what they are.
We're gonna leave with that sage advice. Dale, thank you so much. Hopefully we'll see you
Great.
before the new year. We're gonna try to make that happen.
All right. Thank you,
All right.
Maggie.
Thanks
See
to
ya,
all
team.
of you. Take care. Good luck out there, everyone. Join over 5,000 attendees for the largest AI event in Asia, Super AI in Singapore, February 28th to 29th, 2024. Edward Snowden, Benedict Evans, Balaji Srinivasan, and over 150 others will hit the stage, joining the industry's most influential minds to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a week from February 26th to March 3rd, with over 150 side events that will make for unparalleled networking opportunities. Visit www.realvision.com/superai for 20% off tickets with the code REALVISION.